Hey guys, what is up? Faz here. In this video, I'm going to teach you a very easy trading strategy based on ICT concepts. So this works really well with indices, okay? It can work with Forex as well, but I would recommend that you use this strategy with the indices, okay? For example, NAS 100 and S&P 500. So let's get started. So the very first rule of the strategy is that you must mark out daily low and daily high. Okay, I'm going to explain to you how you can mark them out. The rule number 2 is that you wait for price to take out or sweep daily low or daily high. Okay, or it could either sweep some sort of liquidity. Okay, so you want to wait for price to sweep, take out daily high or low, or you wait for price to take out any sort of liquidity. Okay. The rule number 3 is that you wait for change of character or market structure shift, whatever you want to call it, on a smaller time frame. Rule number 4 is you take your entry at extreme fair value gap, and by I mean the last fair value gap. Okay, these are the rules. So let's get straight let's go straight to the charts. Okay, so we are looking at NAS 100. So the very first thing is that you should go to the time zone settings, and you should change your time zone to New York. Okay, and our trading window period is from 9:30 till 11:59 New York time. Okay, so you should only be trading within these hours, okay, from 9:30 a.m. till 11:59 a.m. New York time. So how do you identify the low and the high, the daily low and daily high? So you want to mark out the New York open. Okay, so the New York open is at this time 12. Okay, so you want to mark out, or you could either just just watch it. So for me, I'm gonna mark the, which is the open is 10707. Okay, so this is right here, our New York open, right? So once you have the New York open, what you want to do is you want to identify the low and the high. So once 9:30 is after 9:30, right? So once the candle closes at 9:30, you can see the candle closed here. You want to mark out the high and the low of the day. So this is the low, right? And this is the high. So we have the New York open at 0000 time, right? 12 a.m. and then we have the highest high. I mean, I don't know what I'm saying. It's the high, right, of the day, and this wick down here is the low of the day. And you want to look for the high and low after 9:30 a.m. Okay, so as you can see, the candle closed here, which is 9:30 a.m. and then you want to mark out the high and low. So I'm gonna mark this out, daily high. We got the daily low, right? So let me put this at the top. Okay, so now what you want to do is you want to wait for price to take out, sweep daily high or low. So for this example, we're going to wait for price to take out the daily high. Okay, because I know it's going to take out the daily high. I've already watched this trade. So let's see how this plays out. So once you have marked the daily, so let me go back, right? So once you have marked the daily high and daily low, what you want to do is you want to drop down to the 1 minute time frame. Okay, and then you wait for price to take out the daily high, and as you can see, price took out the daily high, and then you want to wait for market structure shift or change of character. So this right here, if the structure breaks, I'm going to take my entry from here. And as you can see, price broke this structure. So now we're going to take our entry from this extreme fair value gap. So you can see we have this fair value gap. Let me mark this out. Right. And as you can see, the fair value gap is not filled till 50%. Okay, so it's still a valid fair value gap. So now once you have your fair value gap marked, you want to take your entry from here, and I usually put my stop loss right above the body of the candle, but just to be on the safe side, you can put it just above that swing high. But for the example, I'm going to keep it there just as I normally do. Now you want to take your profit at this level, which is a clear low, right? A swing low. You can see it's a clear swing low. And then you can see it's a 1 to 10 risk reward trade. Now, once this structure breaks, you will go break even, okay? And then you want to mark out fair value gaps around here. So you're going to take your partials here, then you're going to take some partials here, and then you're going to move your stop loss to around here, okay? Once this structure breaks, you want to move it around somewhere here above the lower high, okay? So let's see how this plays out. So we got our entry, as you can see. And if I play this out, boom. So this was a 1 to 10 trading, 1 to 10 risk reward trade. I did not take this trade, and of course this is hindsight. You know, I already knew that was going to happen, but trust me, when you're going to backtest this, it's going to just blow your mind, okay? So I'm going to give you 2 more examples, and then I want you guys to backtest this, okay? So here's an example number 2. So I have marked out the New York Open. So this is 12 a.m. New York time, as you can see right below there. And the high of the day is this. I have marked this out, as you can see, right? And if I go forward, after 9:30, this candle closed, and apparently this is the low of the day, okay? So now after 9:30, once this candle closes, you want to go down to the 1 minute time frame, okay? And then what you want to wait for is a sweep, right? And then you want to wait for market structure shift. So we got no shift at the moment. We got a shift here, but there is no fair value gap, right? So we wait, and as you can see, price broke through the structure, right? And we have no fair value gap around here, but we have some fair value gap at this level, right? So we got market structure shift, and we got this fair value gap, right? So I would take my entry from here. I would put my stop loss right below this candle. I would put it below the body, but there's no body, right? So I'm just going to put it around here. And I would take my profit, number 1, at the break at this level. I would take some partials here. Then I would take some partials here. I know this is close, but you gotta be safe. And I would go for at least 1 to 2.5. Okay. And as you can see, there's this auto block around this level, and some fair value gap as well. So I think we could be taking our profits at 2 risk reward for this trade, because there's this huge imbalance, as you can see, around this level. So I do not want to risk it. So I'm going to take my profits at around this level, which would be 2.112. So let's see how this plays out. We got our entry. And as you can see, we hit our take profit level. Very simple, guys. Okay, now one more thing that I want to teach you guys. So you gotta keep this in mind. Okay, so once this structure broke, right, you would have gone break even after taking some profits from here, right? So but as you can see, there was some fair value gap around here, okay, left. So yeah, you could have stopped at break even in this example, but if you held it, you can see it hit the take profit level. But if you got closed at break even, then you would have secured some profits around this level. So it's very simple, guys, if you follow it strictly. I'm going to give you guys one more example. So here's an example number 3. As you can see, I have marked out the daily high, the daily low. I have also marked out the New York open, which is this, as you can see. I've also marked out the 9:30 open and 9:30 close is here, right? So sorry, 9:30 close is yeah, so this is the open, right? And the close is 11117, which is this. So what we want to wait for is to price to take out either the daily low or the daily high after 9:30, right? So as you can see, price took out the daily daily high, right? We wait for market structure shift. So let's see if price gives us market structure shift. It does not, so it keeps going up. So we're gonna wait for market structure shift. Did we break the structure? No, we just wicked, and I always consider bodies, guys. So let's see. Did we break this structure? Nope. Okay, so we finally broke some structure. Oops, my bad. Which is right around here, right? You can see this low, right? So now the extreme fair value gap is around here, as you can see. So I'm gonna mark this out. Fair value gap. There you go. We take our entry here, put our stop loss right above this level, above the candle or body, and we want to take our, I would take my profit at this level, right? This would be 9.79 risk to reward trade, but bear in mind that I would take some partials on this fair value gap, right? And I would also take some partials when this structure is broken. So let's see how this plays out. So we got our entry, as you can see, right? So let's see. When this structure is broken, I'm gonna go break even, okay? So we take our partial 1, we take our partial 2 on this fair value gap, and do we hit? Yep, we do hit it, and that was a almost 10 risk reward trade, guys. So it's very simple, guys. And one more thing that you should know is if you add daily bias, so if you know the daily bias, right, and you trade in that direction, trust me, that win rate is gonna go way up. Okay, so I'm gonna create a separate video on daily bias, but for now this is gonna work perfectly fine for you. All the rules that I have told you guys, if you follow them correctly, it's gonna make you money. So yeah, guys, I'll see you guys in the next video. Goodbye.